This is a lecture on Assets, Liabilities, and Stockholders' Equity by Professor Carol Bruton, fall of 2014, Accounting 201. The accounting equation is assets equals liabilities plus stockholders' equity. So if assets are $130,000 and liabilities are $50,000, what is stockholders' equity? That's correct. It would be $80,000. Assets, liabilities, and stockholders' equity and revenue expenses. Assets are resources owned by a business. Current assets, which is a subcategory of assets, are expected to be used in the next year. They include cash, marketable securities, also called short-term investments, accounts receivable, notes receivable due in less than 1 year, inventory, supplies, prepaid insurance, and prepaid rent. Notes receivable versus accounts receivable. Notes receivable is a formal written promise to pay and receive an amount plus interest. It's a formal borrowing and lending. Example, when you go to Bank of America and borrow $10,000, that is a note. Interest begins accruing on the day of the note. Accounts receivable. An accounts receivable results from the sale of inventory on account. There is no formal written note. There is no interest if paid on time. When you go to Nordstrom and charge a pair of $80 shoes, that is an accounts receivable for Nordstrom. Accounts receivable are always current assets. If a note receivable is due in less than 1 year, it is a current asset. If a note receivable is due in over 1 year, it is a long-term asset. Property, plant, and equipment. Property, plant, and equipment is a subcategory of assets. It's long-term assets. It's expected to last longer than 1 year. You have equipment, less its accumulated depreciation, giving you a net value for equipment. You have buildings, less its accumulated depreciation, giving you a net value for buildings. And then you have land, and land doesn't depreciate. So then you'd have a total property, plant, and equipment. Then there's more assets. There's intangible assets, which is a subcategory of assets. That includes copyrights, franchises, goodwill, patents, trademarks, leases, and leasehold improvements. And there's other long-term assets, which is a subcategory of assets, which includes notes receivable due over 1 year and long-term investments. Liabilities are what you owe. Current liabilities are due within 1 year. They include accounts payable, dividends payable, interest payable, notes payable, salaries payable. Notice how salaries payable and wages payable are the same thing. The terms can be used interchangeably. Taxes payable, rent payable, and an account called unearned revenue. Long-term liabilities are due in greater than 1 year. They include notes payable that are due in more than 1 year, bonds payable, which are typically due in 10 years, mortgages payable, which are typically due in 30 years. Stockholders' equity for a corporation includes common stock, retained earnings, and dividends declared, a contra stockholders' equity account. The account title is dividend declared, but people often refer to them as just dividends. There's also revenues and expenses. Revenues is what you earn. For example, Nordstrom's, it's sales, what you're in business to do. Examples of revenue accounts are fees earned, sales, commissions revenue, interest revenue, miscellaneous revenue, professional fees revenue, rent revenue. Expenses are the cost of doing business. Examples are advertising expense, depreciation expense, income tax expense, insurance expense, interest expense, miscellaneous expense, rent expense, salary expense, supplies expense, and utility expense. And note how these all end in the word expense, what they will. Note, supplies is an asset account, supplies expense is as an expense account. The 4 financial statements for a corporation are the income statement, which shows the revenues and expenses for a period of time, which measures revenues and expenses. The net income is revenue minus expenses, also called net profit or loss. And the statement of retained earnings that shows the changes in retained earnings for a period of time. And the balance sheet that shows the assets, liabilities, and stockholders' equity for a point in time. And the statement of cash flows, which shows the changes in cash for a period of time.